Yet again, another IPO hits the market, this one being Diffusion Engineers Limited. In this video, we will cover the business overview, IPO details, the market opportunity, followed by the financials of the company, peer analysis, and lastly, the valuation. To start off, Diffusion Engineers are engaged in the business of manufacturing welding consumables, wear plates, wear parts, and heavy engineering machinery for core industries. These products are integral components in manufacturing industrial equipment used across various core industries like power, cement, mining, oil, sugar, etc. Additionally, they provide specialized repair and reconditioning services for heavy machinery and equipment. Lastly, they are also involved in the trading of anti-wear powders followed by welding and cutting machinery. Diffusion Engineers has 4 manufacturing units, and so far they boast of having completed 10,373 projects serving across 48 countries and over 130 qualified engineers in their team. Now moving on to the IPO details. Diffusion Engineers opens for subscription today on September 26th up until September 30th and is set to list both on the BSE as well as NSE. It has fixed the upper price band at 168 rupees per share. So for a retail investor, the minimum lot size would be 88 shares, translating to a minimum investment of 14,784 rupees. Diffusion Engineers plans to raise 158 crores, out of which the entire issue will be a fresh issue. Therefore, there will be no component of offer for sale by the existing promoters or shareholders. The IPO has reserved 35% for retail investors. So what are the objectives of the issue? Diffusion Engineers plans to use the net proceeds from the fresh issue to achieve a couple of key objectives. Firstly, to fund the capital expenditure requirements towards the expansion of the existing manufacturing facility at Khasra. Secondly, to set up a new manufacturing facility at Nagpur. Thirdly, is to fund working capital requirements of the company, and lastly, general corporate purposes. Now, what about market opportunity and the future trend of the industry? Welding consumables market in India is estimated at around 51 billion rupees in fiscal year 2024, with fiscal 2027 projections of around 64 to 66 billion. Due to the rise in demand for improved infrastructure, a lot of investment is happening in infrastructure development, such as construction of roads, bridges, ports, and airports. This investment in infrastructure is one of the key growth drivers for the welding consumable sector, because welding is indispensable in the construction industry, providing strong and reliable joining solutions for structural components. Now, the second subsector is the wear plates market. The wear plates market in India is estimated at around 22 billion rupees in fiscal year 2024 and is expected to grow at a CAGR of 8 to 9% to 28 billion rupees in fiscal year 2027. Wear plates are an essential part of the industries such as power plants, steel mills, quarrying, cement, etc., as these plates protect key components of these industries. As India continues to undergo rapid industrialization, each of these industries would grow and require wear plates to protect their equipment and machinery. Now, talking about India's heavy engineering capital goods, the image on the screen shows the following subsectors and the wide range of equipment it includes. Heavy electrical engineering, earth moving, construction, and mining machinery and process plant equipment are the largest segments of the industry. This heavy engineering capital goods industry is estimated to be rupees 3,100 to 3,200 billion as of fiscal 2024 and is projected to clock a CAGR of 7.5% to 8.5% over fiscals 2023 to 2027 to reach 3,800 to 3,900 billion rupees. Now, coming to the financials of Diffusion Engineers. When looked at the top line, Diffusion Engineers has grown at a CAGR of around 16.6% to 278 crores in fiscal year 24. The EBITDA has also witnessed a healthy growth of 31% CAGR and the margins remain strong at 17% for fiscal year 24. Looking at the bottom line or profitability levels, the company reported profits of 30.8 crores, growing at a CAGR of an impressive 34% over the 3-year period. Profit after tax margins also remained around the 10% mark. Diffusion Engineers also saw improvement in its return on equity and return on capital employed ratios. Return on equity jumped from 15% to 18.5%, while ROCE increased from 17% to 20.6%. In terms of financial structure, the company reduced its debt to equity ratio to 0.18 times in fiscal year 24. Now moving on to the peer comparison and valuation. Among the listed peers, Diffusion Engineers is one of the smallest players in terms of revenue, but its return on net worth is the highest at 18.52%. In terms of valuation, within upper price band of 168 rupees per share, the price to earnings ratio stands at 15.35 times, while the industry average stands at 32.45 times. So as per the industry average, Diffusion Engineers is reasonably priced. Now coming to our last segment, which is strength and weaknesses. Let's start with the strengths first. The company served over 500 clients in fiscal year 24. And if you see the image on the screen, out of the 500 plus clients served in fiscal year 24, nearly 69% have maintained a relationship spanning more than 5 years. Secondly, due to the rise in demand for improved infrastructure, a lot of investment is happening in the infrastructure development such as construction of roads, bridges, ports and airports. This investment in infrastructure is one of the key growth drivers for the welding consumable sector and will ultimately benefit Diffusion Engineers. Lastly, the company's presence across multiple industries allows revenue diversification, with its top 10 clients constituting only 29% of the total fiscal year 24 revenue. Now talking about weaknesses, Diffusion Engineers derives a major chunk of revenue from within the country. If you see the image on the screen, around 90% of the company's total sales comes from the domestic market, making it vulnerable to downturns in the Indian economy. All 4 of the company's manufacturing facilities are located in Nagpur, Maharashtra, which could expose it to risks such as local disruptions, social unrest or natural disasters. Lastly, the company relies on the growth and performance of certain other industries. If you see the image on the screen, Diffusion Engineers is dependent on the following 5 industries for deriving a major portion of the revenues, especially those of cement, engineering and steel sectors. A decline in these industries can impact its financial performance. Now that you have a comprehensive understanding of the company, make an informed decision. Having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.